Here's another from the question bank. Is the market too high to put in any new money at this point?
Yeah, I mean, you saw some of these charts, definitely, that I was just showing you. There's been a really big run up from the bottom last March. We hit the bottom of the 23rd of March. And so it's definitely not inexpensive anymore compared to earnings or even compared to future earnings. So you could make an argument there. Now, I would kind of divide the market up into different pieces. Last year, the biggest run up was in kind of innovative technology in general, advanced healthcare like genomics and those types of things, clean energy. Some of those companies got to a point where they were selling at like 70 times sales, not earnings, but just sales. And so some pieces there are really, really, really up there, and those have actually come down a fair amount since about the middle of February. So I might be very cautious in that category because when the economy recovers, money tends to float into what's called a cyclical stock. And that's a stock that's sensitive to the economy. So it tends to go up with the economy. And mainly you'll find those in the value category. So I think there's some room in the value category. It has definitely run up from where it was as far as that goes. But you take this pent up demand, you take the Federal Reserve that is sitting there saying, hey, we're not going to raise rates even if there is higher inflation. And we'll have to see how the market handles that higher inflation. It's going to be really interesting. But in the end, stocks are good inflationary hedges. And when there is higher inflation, oftentimes that does eventually lead to higher earnings. And so I think it isn't a bad time at this point. I don't think we're, at the top personally. I think there's a bunch of room to grow here, especially in the value side of the equation.